Tax advice for Kiwis moving to the UK. With the recent improvement in the working holiday scheme for Kiwis looking to move to the UK, let's take a look at some tax advice to help get Kiwis on their way. Firstly, let's just cover off what it means from a tax residency perspective to move to the UK. In the most common scenario where a Kiwi is looking to leave New Zealand and head over to the UK for a few years, their tax residency in NZ usually ends on the day of departure, and their tax residency in the UK usually starts the day they set foot in the UK. Double taxation agreement. Yes, there is a double taxation agreement, DTA, between New Zealand and the UK. The DTA is useful because it prevents double taxation by both countries on the same income and is often used when Kiwis live in the UK and have a New Zealand source of income to report on their UK tax return. Working in the UK. Once you have arrived in the UK and if you are looking to contract through your own limited company, we can help you with the company setup, and these days it's relatively easy to get your business bank account established. You will also need to apply for a UK national insurance number. Self-assessment tax returns in the UK. If you are a normal salary or wage earner in the UK, then chances are you will not need to complete a personal tax return in the UK. This is because all of your income will be taxed through the UK pay system, and that has its own way of ensuring that you pay the correct amount of tax. The UK personal tax year runs from the 6th of April to the 5th of April every year, and just like New Zealand, there are various income bands that get taxed at different rates. However, the UK have two different types of tax deductions that get taken off your pay slip. The first is called pay, same as New Zealand, and the second is called national insurance. The other difference is in the UK you get a personal allowance which for the 2023-24 tax year is £12,570. You pay no tax on your personal allowance, which means the first £12,570 in UK income that you earn is completely tax-free. Personal tax returns in NZ. As a general rule, if you are a non-resident for tax purposes in New Zealand, you will still need to pay tax on income earned from an NZ source. Examples of income include A. Interest from an NZ bank account, B. Dividends from an NZ company, C. Rental income from a New Zealand property. Non-domiciled UK residents. Domicile is a tricky concept. If you are UK resident but not domiciled, non-dom, in the UK there are special rules which might apply to your foreign income and gain. Remittance basis. While we're here, let's just quickly talk about the remittance basis. This is available for non-domiciled UK tax residents, and where your income/gains exceeds £2,000 you can elect to be taxed under the remittance basis. Tax advice for Kiwis leaving the UK to return to NZ. If you are a normal salary or wage earner in the UK, then it's likely you have never filed a UK personal tax return. However, if you happen to leave the UK partway through a tax year, it's likely that your employment income will have been overtaxed, so you will be due a refund. If you work through your own limited company in the UK and are looking to move to New Zealand, then with the correct tax planning you have the potential to optimize your overall taxes substantially. This is because of a temporary tax exemption that applies to qualifying transitional NZ tax residents.